Hey guys, John Hunter, your mortgage guy, coming back to you again with another rate update. This one for the week ending in December 8th. So rates stayed steady this week, even after a stronger than expected employment numbers today. 30-year fixed is still between about 6.625 and 7.375. 15-year, 6.25 to 7%. FHA, 6.625 to 7.375. VA, 6.25 to 7.125. Now, these rates vary, and there's a reason why I'm giving a range. It's because credit score, loan to value, loan type, program type, property type, area, all of that matter, loan amount, all of it matters and factors into the pricing. We can see some of those vary dramatically with higher loan to value, with lower credit scores, that kind of thing. So that's why I'm quoting a range. But the trend has definitely been down in the last couple months or last month or so. Although, I don't expect this trend to continue on a straight line down. It's like anything else. It's just not a straight line. We're going to see some bumps as some economic indicators and some reports come out, maybe stronger than expected. But the trend is definitely down. Employers added, it looks like about 199,000 jobs last month versus 190,000 was the estimate. It was a little bit better than expected, but the market didn't really react to that this week, today. If anything, yesterday we had unemployment claims rose for the week to 220,000, and that was only anticipated to be about 218. It was really pretty spot on, honestly, but it was still slightly worse. That trend continues. We went from a 190 a couple weeks ago, and then 200, 210. Now we're talking 220. That trend is what the Fed is looking for. I think it just sealed the deal that next week when they meet, they're not going to raise. They're going to leave the Fed funds rate alone. Now the talk is when will they lower, right? That seems to be the underlying talk right now. Is will it be March or will it be later in the spring, early summer? Time will tell. Right? It's all data dependent. It's all going to be based on the economic indicators that come out between now and then. We'll just have to keep watching it. No one expects the Fed to do anything next week. They're pricing in like a zero chance of anything happening and a, decent chance of them lowering come March. So fingers crossed. We hope that continues. We'll be watching it. I'll be back every week, guys. I hope this helps. There should be a little bit more interesting week next week with the Fed coming out, because we're going to be watching for what they say, not what they do. What they do is pretty predetermined, pretty much. They're not going to do anything, but what they say will give us a glimpse into their policy and what they're thinking as far as, this whole soft landing idea versus going into a recession, how aggressive they need to get with these rate cuts. So, but you know what? At least it's looking up. I see a little bit more activity. Some more listings are coming on the market. This is all positive for real estate, for your investments now and in the future. You need a healthy, oops, I dropped my little pad there. Anyway, have a wonderful weekend. I will talk to you guys next week. I'll be back with another update. Please like, subscribe. I'd love to hear from you if you have any comments, if you have any suggestions, any content, any issues you'd like me to address, talk about, I would love to. So have a wonderful weekend. John Hunter, I'm your mortgage guy. I will talk to you soon. Bye.